WKHS. It's WorkHorse Group. Stock chart technical analysis. All right, so I just covered fuel cell, which is a sort of a similar trade setup. Workhorse was a big one that I was looking at. Well, back here, I was thinking we were going to break out here, and I started going long, and we failed this breakout, and I cried a little bit. I'm over it. But in any case, if you've been following my channel, you know that I've been extremely bearish for the last 4 or 5 months. I've been like shorting the crap out of Mara, specifically. Super bearish on Bitcoin. But we just reached a level in the markets where I just flipped probably a little early. But I called this bottom like spot on, which hit on most charts. It did not bottom on the S&P, which I was actually calling for the S&P to bottom here. But most of the charts that I'm trading actually did bottom there. So I have incredible entry positions, especially on Workhorse here, like straight on the bottom if it actually breaks out here. So I just want to take a look at this whole chart setup and also the general fundamentals that apply to it, because I think fundamentals are borderline starting to matter again, but they probably won't matter for the next month and a half because we're about to get another frenzy of nonsense. So let me go back to the S&P. All right, please like, share, comment, subscribe, and I actually don't have a big plan for this video because I covered a lot of the fundamentals on inflation and interest rates last video, which I don't think interest rates are going higher. I think they're going to flat and actually go lower from here, which nobody's saying is. I can just show you that in like 2 seconds without even switching charts. I mean, this is, this is the near interest rate environment back here that happened after the financial crisis. We didn't get too high, whatever it was, a couple percent. Went back almost to zero. We came here, right, and the Fed's calling for several more rate hikes, and then they're like, wait a second, maybe we're not going to rate hike. But the whole story is this, like, the Fed thought we were breaking out into inflation. A lot of people are calling for that. Probably 80% of people are calling for that breakout, and it failed. It failed. Incorrect. They're wrong. We are still in this same trading pattern for the last 40 years. We're going to flat sideways right now, which is bullish. That's super bullish for the next couple of months. And then we'll probably go back to a zero or near zero interest rate environment. So this move is bad. Like, this move was COVID crash. The move towards zero is not good. Like, that will be a rip to the downside. That's going to be a huge monetary contraction in the banking system when that happens. I think we have a couple of months before that happens. I think that we have a couple of months of bullish. Then we have another COVID crash style thing. And then we're at near zero, probably going sideways again, which is a month that's even more bullish. So I'm calling for up, down, up, and that's what the interest rates and the international bond market. Sorry, this is Euro-dollar futures, but the international bond trading is what controls the interest rates. The Fed does not control that stuff. They just guess what it's going to do, and they just talk about it. They don't control it. They don't set the interest rates. That's complete BS. They just don't. Like, the Fed does not control the international bond market. That's nonsense. Anyway, let's go back to the S&P. Let me show you what the S&P is doing and why I think we're going to make a move here. Although the S&P did not make this the W bottom pattern that I'm looking at, what we have here, and I'm on a daily chart, is this red line is the top. We had like that big megaphone pattern for the last like 4 years on like the Volmageddon drop and the 2018 drop and the COVID drop. Here, let me just go back over here and show you. instead of just saying it. It's just here. Yeah, but anyway, we had like Volmageddon drop, 2018 drop, COVID drop, right? And we painted a megaphone. And so this megaphone is very, very important because this downside is a real thing that's painted. And also, the upside, the top of the megaphone is important because we just did this breakout over the top of the megaphone, which is the exact same pattern that we had right before the top in the Great Depression. And I did a video that painted this and what happened in the Great Depression and what is happening right now that I think is going to happen. You break out on top of the megaphone, right? And you test the top, and then you go into a topping pattern, which is basically another megaphone. And you can just see here quickly one, and the second one's twice as wide, and the third one is twice as wide, and the fourth one is twice as wide, and then you're in big trouble. But it should bounce from here, but whatever. That's later. That'll be next year. If this pattern plays out like that, though, what I'm calling for is a rip to a higher high right now in the next month or two. If that rip happens, I'll be calling for a lower low. And if that happens, I'll be calling for the top of the market to be up here crazy. But anyway, this is the pattern that played out on the first Tesla blowoff. This is the pattern that played out on the GameStop bubble blowoff. That's the pattern that played out on the Great Depression top blowoff. So it's a blowoff top pattern. It's a really common blowoff top pattern, and I think that we're doing it now. And I guess you call it the everything bubble here. Yeah, in any case, I covered a couple of other indicators last video. Like, I think the NASDAQ is going to lead because it's starting to get strong and it's not pulling back. With the last 3 days pullback, like the NASDAQ didn't want to pull back with it, so the NASDAQ is starting to look strong again, which I did not expect, and I switched. Because I was looking at like gold and silver miner positions. I was looking at materials positions like Alcoa, FCX, like Royal Uranium, sort of materials and miners positions that do well towards the end of a credit cycle. But what has actually been volatile and what has moved the last few days is GameStop and electric vehicles and NASDAQ. So I think we're going to get another like crazy NASDAQ rally here on this next leg, just based on what's moved like the last week or two. That looks like what's going to move. Oh yeah, and so GameStop, I'm still waiting on the earnings. They come out today, but they haven't posted them yet. So I'll do a GameStop video soon, but not this video. We're going to look at WorkHorse, because I think WorkHorse and FuelCell are my two favorite stocks right now, just for sort of, you know, I guess all the reasons I just said. Like, it looks like the NASDAQ is gonna do another rally, and so these are small stocks within the NASDAQ. But I've looked through, I don't know how many stocks, like 50 stocks, 100 stocks that have maybe reasonable pattern, like maybe like sort of bullish patterns, but I think WorkHorse and FuelCell specifically have bullish patterns, and their NASDAQ, and they have high momentum, you know, and they have short interest. So it's like the combination of like every possible thing that can make a stock explode to the upside exists in WorkHorse and exists in FuelCell. GameStop obviously is a bigger meme stock that's not NASDAQ, and also it has already posted like a big move the past week. That's going to be interesting. I'm going to do GameStop soon. There's a couple other stocks that are high momentum that have done good patterns. TCAT has done a really cool pattern that's bullish, and it's super at support, and it broke out. And I know I've done like specific videos on this that people have asked for, and it's starting to look good. And I think this is going to be bullish, but I don't. Oh, and it's breaking out like more than I thought, just like now since I looked at it earlier today. But I think Takong is going to break out, but I don't think that it has the firepower behind it that probably WorkHorse and FuelCell will have. And since Yonex also has a pretty good trading pattern, it has a lot of volatility, and it's coming into support, and I think it'll pop here too. But I traded out of these two right now and into these two just because I think there's just going to be a bunch of money flow coming into the NASDAQ over the next month or so. And let me just go back to the workhorse chart, and I'll just talk about, I guess, the Fed a little bit. People are talking about the Fed is is tightening, which is not true. They're not tightening yet. Like, they're talking about tightening, and we've had a big pullback, like a lot of volatility leading into the tightening, but they haven't started tightening. And they're talking about raising interest rates, 2 weeks ago, but the last 2 days they're like, well, we're probably gonna go side. We don't know. Maybe we'll stall the interest rates. Blah blah blah. Let me go back to the euro dollar chart, because don't listen to the words the Fed says. They're just literally looking at this international bond market chart. The euro dollar futures is the chart for the international bond market. This is the U.S. Treasuries that trade all over the world. The Fed doesn't control it, and they were guessing that it's going to break out, and they were guessing they're going to raise interest rates a few more times, and it did not break out. It didn't break out. It completely held that support, and now it's going sideways. And now they're like, well, maybe we'll take a break on the interest rate hikes. It's like, come on, guys, this is ridiculous. Like, I can look at the chart. I don't need you to guess what it's going to do. Like, you're wrong like half the time, whatever. Nah, they're right more than half the time. It's just like when they're wrong, it's sort of an obvious spot where it's hard to guess, and like it doesn't matter what their guess is. But in any case, we're looking at workhorse right now, and workhorse has this uphill W pattern. This is an extremely, extremely bullish pattern that usually explodes to the upside. And there's a combination of technical patterns that make workhorse look really good. So yeah, I really like this stock because it's less than $3, and it has the ability to go to $40. I mean, it was just there. I don't think it's going to 40 now, but I think it can pop. It can go 5x something in a month easily, just because it's volatile and it's small. But it's got this downtrend. It just broke out of this downtrend, and it's also coming into a support area here, which is a pretty long-term support area where it could pick up. And then like outside of the technicals, just the money flows. If money flows are going positive again, which does not require any government stuff, like the government doesn't have to print stimmy checks or something. Like, that amount of money is like 2% of the economy. Like, that's not who really creates the dollars. The banks creating loans is where dollars come from on the whole earth. And just looking at American stuff does not paint a good picture either, because most of the money on earth, most of the dollars on earth are loans from banks, like mostly in Europe, to companies and governments all over the rest of the world. Like, that's where most of the dollars come from, is just banks outside of America loaning dollars out of thin air to companies, that are also outside of America. Like, that's just where the dollars come from. And this entire like quantitative easing thing and everything that's happened in the last 2 years was making the banks solvent and functional, and they are totally solvent and functional right now. And they're very capable of printing a ridiculous amount of margin loan to hedge funds, for instance, which if you look at the IWM, you can get a pretty good read on IWM is my favorite way to look at like what money is being loaned to hedge funds right now. Like, the IWM just shows you that, because it's loaded with financials and it's loaded with small caps. And it just like really tracks like the money that you can't really see coming into the market, like international money coming into the US market, international like margin loans. There's a ton of money flow that you cannot get data on. But the IWM really prints that data well. Like, it's my favorite thing to track like just money flow specifically to the stock market, because there's tons of money flow just to companies specifically, but that doesn't like directly affect the stock market. But the IWM shows new money being printed into the stock market. Basically, like the IWM is a very good indicator, and you can see this horizontal support that we just picked up, like the Volmageddon top, the top before COVID, boom, boom, or this is the 2018. No, this is Volmageddon and the 2018. But this is the top that we broke out of, and we just like did a big uphill W coil, boom, right on support at this level on the IWM, which indicates to me that banks want to loan money into the stock market right now. Like hedge funds want to borrow money, banks want to loan it to them. That's what the IWM looks like to me right now, and it's not confirmed yet, but I like the technicals. I'm calling it early, and I can be totally wrong. I did a very good early call on this formation on the DXY about a year and a half ago, and I'm doing that call on the IWM right now. But the IWM is way more important to the market than the dollar like FX exchange rates. The IWM is literally like new money that's coming directly into the markets from all over the world, and that's what I think is going to happen right now. Is we're going to get a flood of money, a lot of international money into the market, and we're going to see a big pop. And so, anyways, I'm looking at WorkHorse, and I can go over a little bit of what's happened with the company here. If you're new to WorkHorse, WorkHorse had a bad CEO that was making. Well, he raised a ton of money. He created a ton of hype, and it was while all this money was flowing into the market during the meme stock craze. But he created vans that have faulty wiring, and like there's some suspension problems. So like these are delivery vans. They're electric vehicles. They're delivery vans, but they're supposed to run for like 400,000 miles. And the CEO had like some scandal with stock trading and um, yeah, just like raising money in questionable manners. But without going too deep into all of that, like the previous CEO was fired, and the new CEO has actually been in the automotive industry for a long time. He's like, listen, this company knows how to make vehicles. This is a real company we're gonna create like good delivery vehicles. As far as EV company goes, like I think there's like 9 out of 10 EV companies are making garbage that won't exist in 10 years. Like WorkHorse will be making these vehicles as long as there's not like a monster recession that puts them out of business. They're going to be a real company that's making EVs that are delivery. They're like last mile delivery vehicles. They're not competing with Tesla. Tesla's not going to make this type of vehicle. So I think this is like the little sister company to Tesla, and it has some similar stock trading, but it's a tinier and it's more volatile. So I just think it's an interesting stock to trade. But so what they're doing now is they have to fix the C series trucks that have been out, for the last like year or two, have some electrical problems, like some suspension problems. So they have to. Well, they didn't deliver them. It's not like a recall because they haven't delivered them yet. But they have to fix them all. They're gonna fix like what was it, 160 something? I don't remember the numbers, but they have to fix all the C series vehicles, electrical and suspension kind of stuff, in order to deliver those. And then they're gonna come out with new models in like a year and a half. Is basically the story with the company. Is they make the current vehicles need improvement, and the next series should be good, but it's a growth stock that looks like it's going to be making good products 10 years out, and that's not super important right now for the trading over the next couple of months. Like what's important now is it's in the right sector. It should have the right money flows. It's in the NASDAQ, and it's small, so it can move large. And then if I zoom in on this little guy, what we had today, so you have this uphill W off of the support and I can go show you this on a couple of other charts. But usually what you get this uphill W, which is a super bullish support pattern, and then you'll get a rip and you'll get a pullback like right to the top of the W. So the workhorse W is not as tight, and it didn't coil as hard. It didn't have as much volatility as like I just did a video on fuel cell, which had a super hot coil, and the pullback today was like right to the top of the coil. Like this one didn't break out quite as hard. It's a little bit weaker of a uphill W pattern, but this is the same pattern across a ton of charts, particularly the smaller ones in the NASDAQ and across the IWM. There's tons of charts that have done this, but also I just completed a huge descending wedge breakout right onto support, and you know it's been at 30 something, $40 here recently. It has this uphill support line that it broke, which is not good. But even if it has a long-term bearish pattern, it should have a bullish pattern for the next month or two. Even just to backtest the support could be like a 5x move on this chart. So in any case, that's what's happening with Workhorse now. This was going to be one of my favorite stocks. Like I was trying to look for a breakout like right here and look for this pattern there, and it broke down here. But I do think it's at support now, and I do like this chart still. I'll flip over to fuel cell again. I just looked at this because it has a similar trading pattern. But like you can see on the fuel cell chart that it doesn't quite follow the COVID thing. Like the bottom here is a big uphill W that happened a year before COVID. The COVID pull down's here. But now we're coming right down into support on fuel cell chart here. And you're getting the uphill W and the money flows coming in. So I've actually, fuel cells becoming one of my favorite technical charts. As far as companies go, I mean, it's a hydrogen fuel cell company, but this is the pattern that I'm looking for on different charts, is a really hot coil that's actually a little bit steep. And then you get a pullback right to the top of the coil, which we got today. And so I bought big into this today, and I don't think I bought more Workhorse, but I bought Workhorse at the lows. Like I have a pretty good Workhorse position right now. But what you're looking for is for this uphill coil to hold, and this pullback to be like the last pullback before a big run. And so that's what I'm playing now. Is I think a bunch of new banking money is going to come in, new hedge fund money is going to come in right now, and it may only last a couple of months. We can worry about that in a couple of months, but just for now, I think that's the general idea, and there's a couple of charts that are doing this pretty well. So yeah, Workhorse did the same uphill coil, which is good, and it did the pullback, although it didn't break out above the coil and pull back to the top of it. So I don't like that as much, but you can see the angle of it is pretty good. And I mean, just the breakout is very clear. Like we have support, like big breakout of the downtrend, boom, back to support, uphill W. Like the technicals are killer, and just the sector and everything looks like it's good. So anyway, that's the idea on Workhorse. Let me just look at GME real quick because it's right here. You can see that, well, GME, the other charts, there was a blow off in Feb, which GME definitely blew off in Feb, but it rallied like back really high, which almost no other stocks did. Anything that blew off in Feb didn't come back up. Like GameStop's the only stock that did that. Most stocks either did a Feb peak and then a higher peak here over in like November, October, or they did like what I was looking at on fuel cell and Workhorse. They blew off and they did a much lower peak here. So I mean, I guess that's a lower peak on GameStop, but I don't know. This chart is just, it has a ton of energy, and it's just like, it's just trades in a weird zone. It's not it's not following the money flows the same way as other charts. So I just think this stock is still super interesting. And also, what happened here? This is the same breakout that the whole general market did, and this is the same uphill W that you get on a ton of other stocks. So GameStop looks really good, but like GameStop threw a freaking flagpole, and this was like 2 days early before anything else moved. Like GameStop just threw a huge flagpole. It did a big like breakout on the uphill W. So I think the volatility on this one might be good. But it's just another example of the trading pattern that I'm trying to show. And then there's some other ones that I have here that did it more weekly. I mean, this is a great breakout on TCAT, and it came down and did the uphill W. It did it super weak. It's just kind of flat at support, but it's actually at support, so this is also a good chart. Although it doesn't look like it has a lot of firepower, it's still very technically a very good chart. And then Senseonics did something similar. It had a support pattern, and it did the two blow-offs, came down to support. It's trying to do the uphill W, but it's kind of compressed, and it also hasn't really broken out of this downtrend. So that one has potential, but it hasn't broken out yet. It doesn't look as good. But in any case, that's the kind of pattern I'm looking at across a couple of different charts. Tesla has followed the general market. I mean, it had the same kind of peak where you roll over onto the downtrend, you pick up a downward wedge. This is a really typical topping pattern that's on the whole S&P, and then you start building these increasing. It's a megaphone pattern, but it's just like these increasing like volatile peaks, right? So I mean, I'm looking at a Tesla number here, not too far away. That's like 1,600 or something in the next couple of months. And I don't have any Tesla position right now because I think some of the smaller stocks are going to have a bigger percentage return. Like Tesla maybe can go 3x. Some of the other ones could go 5 or 10x on a vertical kind of punchy move like that. But Tesla's really cool. I was thinking about getting it. I just didn't like the shape of the bottoming pattern here on Tesla. Like this is like, it happened late and it looks weird. I'm like, I'm just not comfortable really with it. Although it is pretty tightly following the trend of the general stock market right now. So, I mean, obviously, money flows come in, like Tesla's going to get them. I do like this stock. I just don't like. I didn't get a good trade entry, basically. I had a target that was around like 550 somewhere that I thought Tesla was going to come down to. I would have bought the crap out of it if it came here, but this is where it rallied, so I missed it, I think. Not that I don't like it, I just didn't get a trade entry. So that's what I'm looking at across a few things, like several NASDAQ stocks. Some other sectors are doing similar things. Oh, Upstart, I haven't looked at this in a few videos. Upstart's a wild one. You know, they make loans to smaller companies. It's like tech kind of loans. And so it's a newer banking company, and they're not really following the. I mean, they're just not like Feb. They're new. They definitely didn't blow off there. And then yeah, like October. So they had a higher high, and then a massive drop, like a teleport drop, and they're still under a downtrend. So this is volatile and very interesting to watch. And I don't know if a rollover. If the interest rates go sideways and down, I don't think that's great for the banks. Like this, when the interest rates were like low and rising, it looked good. But this is like like a small fintech kind of financial company that I think is really interesting to watch. And Cassava is in the medical industry and has been very volatile and interesting. So I brought that one up to take a look at, but it just failed. I don't know if I should make a video on this one specifically, but it just failed a punch today. Like the last 2 days, it came down below the bullish trend. It came down broke below the bullish trend, and it just rejected from both trend lines. So that looks bad. It looks bearish to me right now. It looks like you just lost the bull trend and you're picking up continuation on the bear trend here, which could change in the next day. It could jump on top, but just like today, it just failed, and it might come back and test it again. But that's a look at some stocks that are volatile and like some different sectors. I thought that'd be a cool thing to look at. If you're gonna look at WorkHorse, I guess, and Tesla, you should probably flip through the whole mess of sort of EV stocks and just see where they are. ARK has just like flopped way down, and it like people hate ARK right now, but ARK's doing the uphill W move right now with the top test, the whole thing, and I just actually listened to a kind of a long Kathy Wood interview today where she's talking about inflation has peaked, it already peaked, and we're going to get actual deflationary waves from the monetary system and from the tech sector, just being able to create, just being able to create more tech, and that's just deflationary because I don't the way that people use the word inflation and deflation makes me annoyed. That's not what inflation and deflation means. Like prices increasing or decreasing because of production has absolutely nothing to do with inflation. Inflation is the number of monetary units. Is it going up or down? If if there's more monetary units, that's inflation, and that causes prices to go up. But prices can go up or down for other reasons, and like just people using inflation wrong pisses me off. Kathy Wood is one of the people that uses inflation incorrectly every time she speaks, and she pisses me off. But I agreed with a whole bunch of the stuff that she was saying about interest rates and about tech and about money flows. And it's a lot of the stuff that I just said I do agree with, but I don't like people using the word inflation incorrectly. I think that's annoying. But let's flip through some EVs since we're looking at WorkHorse. I mean, we've had super bearish trends that blew off, mostly Fed. Canoe blew off a little earlier than that, and then it had the second blow off like October, November. Like you'll see this on a ton of charts, like the blow off in Feb, then the blow off in November, and then there was like a run out in March, another peak. Like almost every chart kind of has that shape to it, but like the height of each peak is very different on each chart. This one looks awful. It was just lower peaks every time, and now we do have the uphill W, but it's weak. So I don't like this chart, but you can see how it fits the pattern. Nikola, I think, is one of the most ridiculous companies that makes absolute garbage that won't exist soon. It came out as a SPAC. It had crazy hype nonsense. It's not even like blowing off at the correct time periods. It's not really even tracking the market. This is sort of the second peak. And I did a really poor job putting this because I was trying to do put options on this thing over here, and it just didn't have a lot of downward momentum. It was weak. Like the puts needed to be at a weird time back here on this thing. But yeah, anyway, this looks bad. So like the sector in general for EVs doesn't look great. I mean, Lordstown is just a downtrend forever. Rivian, like they're trying to come out with evaluations that were just like insane. They had the tiny little move, but this is a downtrend that, well, it may. Let's look at it. This actually may be breaking. Not yet, but again, you can see the uphill W coming into a resistance area. So this stock may break out soon. I don't like that chart, but it could break out with the rest of the chart. I much prefer to see things that have like some past bullishness and have some support to the chart. So this has a bearish pattern and a breakout, and it's breaking down a little bit through support, and it's not showing the strength. of a couple of other things. So I think if you get the general trend of the NASDAQ and sort of tech and growth running again, like these can definitely run, and random ones might move a lot, but a lot of these charts don't look very good for a bullish entry. So if you're bearish, it's the bear entries are kind of tricky too because we're not at a spot high enough that is attractive to short. So for me, I would rather stay out or find a bullish entry at the point that we're at right now. I know if you guys follow my channel, I've shorted this thing a bunch of times, and it works. It's been working fine, but again, like this looks like a area that's not a good idea to short, and it's way down by $1 now. So like, um, yeah, that thing has just been hideous forever. Oh boy. This was another one I tried to go bullish on back here. You can see the support sort of setup. We came into a support area and it looked like we were going to break out. And so this is a good warning actually for everything that I was just talking about. If you look at this chart, right, it looks like it comes into support. It looks like it's breaking out of the downtrend. Boom, and then it just like dumps and continues the downtrend, right? So this is probably more of like a ABC wave. Like you get like the A, and then the B is a false breakout, and then the C just continue this downtrend. This looks like an ABC wave to me, and I bought the false breakout, and I had to trade out of it pretty soon after that, which was lame, and that switched my whole position on anything I was bullish. Actually, when this failed, I closed every bullish position I had. That was several months ago, whatever that was, like December, January. And that was around the time I started shorting the crap out of Mara. When all of this failed, I went like 100% bearish again. But I'm taking another bullish position here, and not on this stock, but you can see this is doing the uphill W. It's a small one. It doesn't indicate a huge run, but it should rally, and especially if you have this resistance area where you broke the bullish trend. I don't know. This one looks like it's on a C wave down, so I don't like this chart. But you're getting the bullish W, so there's just sort of an obvious upside target from that technical pattern to where you broke down. And you can, it doesn't have to be an ABC wave. It's a couple ideas, and they're all bearish, I guess. But I mean, you could get a couple of months of a pretty big bullish trend that goes 2 or 3x before you continue a down move. I don't know. That one may be interesting to trade, but it doesn't fit my my theory and my couple of stocks that I'm interested in right now. Yeah, Aqua Metals was another one. That looked like it wanted to break out. It looked like it was going to try to find support, and it continued to the downside, and now it looks like it's trying to break out again, but it's underneath. I don't know. This is a mixture of signals that's really complicated. But yeah, Aqua Metals is materials. They do mining for like lithium and cobalt, which is, it could be an interesting kind of sector. It's related to growth, but they're pretty rare sort of earth minerals that could be a more long-term, fundamentally bullish thing over the next, I don't know, 100 years, because these minerals are hard to come by, and if the current technology that's being developed lasts, 50 years, 100 years, and these minerals are rare, companies like this are going to be extremely important. American Battery Metals, similar. They do like some recycling and stuff like that as well. And this looks like an uphill breakout at maybe a support area. I actually haven't looked at this chart in a minute, but this may be breaking out and maybe has an uphill pattern here, but it's not strong. This chart actually looks pretty bullish. I don't love entering a bullish trade at a higher support level. I prefer to enter at the obvious support level. But American Battery Metals actually looks pretty good. I didn't notice that chart looked as good as it does. Cost, this is related to like the GameStop and GME trades. Getting outside of what I was trying to talk about now. But you know, this is crazy. I mean, it went from less than $1 to over 100, and then just kind of rolled over, and it may be breaking out and picking up. You can see my upside target here. There's no call options on this. Cost makes headphones, but yeah, like the history isn't strong. It's like $1, and it just was a crazy meme stock, and maybe it's picking up, but I don't particularly like the company or the past shape of the chart, and it broke through support, and maybe it'll pick up, maybe it's breaking out, but don't love that chart, but it's an interesting one. It's definitely related to some other meme stocks that could pick up again, but I'm not sure. And then you have the we'll talk about Bitcoin and everything else. You know, these MicroStrategy and Mara and things are related to Bitcoin trades, but they're stocks that you can trade related to Bitcoin. They've obviously been super bearish for a minute, but MicroStrategy actually has a really, really powerful uphill W and an actual perfect technical top check of the trend. So I actually really like this pattern as a bottoming area where this thing can rip. And maybe I just will talk about Bitcoin quickly. Like, it looks like it wants to rally short term, and I don't know what it would do after that. Bitcoin's looking really tricky, but this is actually a pretty good bullish shape setup. I mean, I don't know, it's coming into resistance, but we see this shape across a bunch of charts, and this is an extremely bullish W shape, but it's not a long-term one. The size of it is small. The size of the rally is relative to the size of the W, but you get the stab, and you get a hot coil with an uphill, and you can see the angle of the, well, that's not exactly the angle I was trying to draw, like more like this angle, but you can start rallying, and then you can bull off the angle. I mean, you can see that could be pretty big, from 130 something to 1,000, and then you can pull back to support, something like that, just off that size of a W. Like, those are the kind of moves that usually happen. That's like 80%. That's like an 80% upside trade after you get this hot W. That's my favorite bullish bottoming pattern by a long shot. Let's see, Mara is not making that pattern. This was the stock that I was shorting the crap out of last year, from about here to about here when it broke out. I did this short trade with, I don't know, 60% of my entire portfolio. That was pretty effective, and I completely missed every bit of this just because I had no idea what was going on. But now we're doing pretty interesting bottoming patterns, and it's not certain whether we're going to run into a bull trap and go to lower lows. Like, is it a real bear market now? Because I don't think it is. I explained that stuff already in this video, so I don't need to get into that. Riot, similar. Hut 8, similar. Doesn't look good. Bitcoin doesn't look strong, but it looks like it'll try to rally. And then there's like materials stocks, which should do well at the end of a credit cycle. And I mean they have been doing pretty well. Like, Alcoa has been bulling and bulling. Bulling. It looks good, but it's breaking the uptrend, which is like, wait, what do you, now what? Like, as this looks like it's coming into a topping pattern. So maybe we can resume the uptrend. Maybe we can back check the uptrend and do like a uphill, like an M top or something. Like, it's starting to look like we're getting into a topping area on this, but there's probably more upside. Alcoa, let's see, FCX. Alcoa's aluminum, FCX is copper. Freeport McMoran is copper miners. And they supposedly have a new technique for like copper leaching with using bacteria, which sounds interesting. But I mean, you can see this thing's just flattening out on this channel. So, and it's kind of at a historical area where it's traded before. So, I don't know. I was expecting to be really bullish on FCX, but it's just kind of hanging out and not doing much. So I don't know if my idea that materials and minerals will bull is really working right now. This looks pretty wild, and I have positions in these three, but I don't know that they're going to go crazy on this leg up if we get a leg up right now. So, and I was looking at some silver miners and stuff like that as well, but they're not looking as strong as some other things. Well, obviously that one had a scandal collapse where they don't actually control the mines that they claim to control. Uh, they had some problems. I don't know. I looked at some short stocks. So these kind of short stocks like Beyond Meat and stuff like that could become interesting just if we get a bunch of money flow, and if the short positions are high and they get squeezed, you can get some crazy moves. But that's why I'm looking at some of these stocks that I'm looking at now. Like WorkHorse, Fuel Cell, and GameStop are in indices. They're inside of indices that should get big money flows. Like GameStop's in the Russell, Workhorse and Fuel Cell are in NASDAQ, and they have high short interest. And so if you start getting a move up in the whole sector that they're in, like you can get a short squeeze on these specific ones just from generic money flow. And then small hedge funds can jump on top of it, and you can get into a crazy short squeeze kind of war, and you can get crazy stuff like GameStop. Well, GameStop's still crazy. Um, yeah. Anyway, I'll look at GameStop in the next video. Their earnings are probably coming out about now, and I need to check on that. They're not posted on TradingView yet. Like TradingView, and I'll take a day to post them. But like their earning estimate is negative to begin with. Like, how good could their earnings possibly be? Like it's a short interest meme stock. Like their earnings don't matter. But I'll look at I'll look at them anyway. All right, so that's not investment advice. Please click the like button, and we'll take a look at GameStop in the next one. Cheers.